Joining us from IG in Melbourne. Stan, good morning to you. First of all, we saw the Aussie there reversing from its lows. Is it time to get short ahead of tomorrow's jobs number?
Yeah, absolutely. We did obviously see the Aussie dollar trade down to around the 93.3 level. Of course, there was a strong reversal from there, and a lot of people out there were just feeling that US dollar weakness was responsible for the reversal in some of these risk currencies. But I think we actually feel that the move in the US dollar yen, especially that sharp move lower, actually resulted in traders looking elsewhere for long positions, and the Aussie dollar was one of the main ones after having been beaten down recently. So we've seen it trade back to around 94.5. Now this obviously is where yesterday's highs were, and of course we do feel that traders are still quite happy to sell the pay into strength. On the calendar today we only have the Westpac consumer confidence number, but of course any excuse these days to sell the Aussie is always taken, and if this number disappoints and if the commentary isn't that great, then of course absolutely we do expect to see the Aussie dollar sold back towards the overnight highs. Tomorrow's jobs data will probably carry a lot more weight, but we can't look that far without looking at the volatility we're expecting from Japan today and the potential it has to significantly move markets yet again today in Asia.
Yes, Stan, those who bought the dollar yen got shafted overnight. Can we expect traders to still stick to that buy the dip mentality?
Yeah, we dropped to around that 96 level. Of course, we are expecting it to continue those sort of losses early in Asia, potentially trade towards Friday's highs, which is in the 95 region, or just a touch below 95. Now, a lot of traders will probably start looking at getting involved at those levels. Of course, in the short term, the weakness is stemming from the BOJ's decision to maintain its current policy setting, but if you actually look at the commentary, it wasn't bad at all. Of course, they're already looking at a slight improvement in their forecasts, and if economic data from Japan continues to support the notion that things are turning a corner, it certainly might start to encourage people to buy these dips. And of course, we can't ignore the fact that they are still going ahead with their monetary easing. It's just that potentially they haven't really addressed the volatility in the bond markets, and that's what's really disappointed markets, along with not extending their fixed rates on those LTROs. So that's another factor that the market was slightly disappointed by. But all things considered, they're a long way from where they were a couple of years ago, and we do feel the current officials will push ahead with the current policy, and this will continue to underpin Japanese equities going forward. We just feel that BOJ Governor Kuroda is just holding back a little bit of ammunition in case we do see further volatility down the track. Then he has to have something up his sleeve to be able to use to appease the markets. But for now, of course, we are looking at a sharp drop in the Nikkei, the open down about 2.7%. Now this will see it trade below 13,000. So that's quite a sharp drop from those highs near 16,000 that we were looking at a few weeks ago.
Stan, opening calls for our market, when we take into account the factors you said there, we're looking for losses of almost 3% for the Nikkei. What about the ASX 200? SPIs are telling us about 1% at the moment.
Yeah, we're not looking as bad as Japan, where we're currently pointing towards a 0.9% fall at the open, right around that 47.16 level. So we do feel we might start seeing some consolidation around that 4,700 mark, which is where the rally from the lows in November last year briefly paused, and we saw a little bit of consolidation there. That might see a little bit of support, but all things considered, the metals continue to deteriorate. BHP's ADR is pointing slightly lower at around that $33 mark. At the same time, the gold names continue to drop quite significantly, and they are now growing talks about potential for capital raisings across the gold space, as the gold price continues to remain relatively subdued. Potentially we might see the healthcare sector maintain its strong run from yesterday. Of course, we had the newcomer Virtus coming in very strongly yesterday. The rest of the healthcare space, the likes of Ansell, Cochlear and CSL also put in strong performances. So if there's one sector to look out for some bright spots, it will probably have to be the healthcare space.
Okay, Stan Chamu from IG, thanks for your time this morning. Stan joining us from Melbourne there, and back to one of our top stories this morning. All staff working at the Geelong headquarters of retail chain giant Target have been asked to be on site this morning. The company will be confirming a number of job cuts with around
right down to 3.5% based on this OMT, and Draghi came out the other day in the ECB press conference and said that this was probably the most effective monetary policy action that a central bank's taken in the last decade, and I totally agree with him. You know, he's done, without even activating anything, without actually anyone applying for this, he's done a fantastic job in communicating this to markets and lowering the risk premium within the euro. So yeah, I think if it doesn't succeed, and we probably, as I say, won't know until September, then this would be a significant risk-off event. However, they've never blocked anything at the Constitution on the EU level. They've done stuff within Germany, and I don't expect to see this again. The market consensus now is that we are going to see some perhaps caveats attached to this to make sure it's more within the German Constitution, but it's going to be the main event this week with the Bank of Japan as well, and it's going to be what everyone on the sort of, I suppose, macro side is going to be looking at. And you know, I wouldn't be selling on the back of this, at least until we know a little bit more, but I don't expect to see this being flatly rejected.
Okay, Chris Weston from IG, thanks for your take on everything this morning.
Thanks, Kate.
We've got to take a break. When we